Greetings, this is Dwayne from CFRN. We are recapping March the 28th. As you can see right here on my screen, March the 28th. I'm really going to attempt to go through this one quickly. There are no screaming children in the background this time. All is quiet. Everyone's tucked away. Visions of sugar plums hopefully are dancing in their head. Now, well, I better just move on. Remember, the whole point of this series of videos is I'm trying to get you from the 23rd of March 2012 up to today, which is April the 2nd, 2012. And if I can do 2 videos a day, if my math serves me correctly, we'll be there about a week from now. At which point, I then hope to do 2 videos a day, one of the S&P, one of the Dow. In case you missed the previous videos, I covered a lot of ground. You really should listen to them if you haven't, because I'm trying to point out some painful truths to you with these videos. I'm not trying to sell you anything. I'm not trying to convince you of anything. I'm just trying to show you some of the truths about trading, about what we do and about how we do it. Okay, so let's get rolling. This vertical line is the beginning of the session. I'm showing you Globex. Now, God, here I go again. I'm going to say it though because it just seems so important. If you don't trade on Globex, what I'm about to show you really doesn't apply to you, does it? I know. Why don't I just show the day session? Well, because some people do trade Globex. Some of our partners live in the UK. We have partners around the globe. They trade the Globex session or the UK session or the Asian session more than they do the US. So what do I leave them out? No. So that's why I'm recapping everything. I'm just doing the whole thing from, I can't say bell to bell. I'm doing the 24-hour day. All right. See, I've already burned up 2 hours and 30, or let me say I've burned up 2 hours and 43 seconds. 2 minutes and 46 seconds. And we haven't even looked at the first trade. All right, let's do this or we'll never get it done. I am going to again use my horizontal line tool, which I typically use in the trading room only for my weekly trading zones. But I'm using them in these videos to help show you exactly where price was when we got a buy signal or a sell signal. The buy signal here, the first one after midnight, comes in right here. Why is that? We have a bullish cross, the CFMA1, the blue and red line, which is the backbone of our CF indicator set, is above the green line, our BBC, also known as the bullish bearish cross. Means we're buyers. So when price pulls back to right there, we're a buyer at what price? 1408.25. Okay. Then what happens? Price pulls all the way down to 1406.25. In at 1408 goes to 1406. If you're using a 2-point stop, hardcore 2-point stop, truth of the matter is, see, I could shimmy this around a little bit, but I'm not going to do it. I'll leave that to the other guys. I'm just going to show you the truth, okay? If you were running a 2-point stop, you got in at 08 1/4, you got stopped out at 06 1/4. If you somehow got in a little bit differently, or you had a little bit wider stop, then you're still in the trade. And if you're still in the trade, price actually made it as high as 1410.75. Okay. And yes, I'm going to use my calculator because These videos will live on the internet forever, and I don't want bad math to haunt me. Even with the video, I'll probably get a little bit of that. 1410.75 minus 1408 1/4. 2.5 points. So this is a 2.5 point rally if you manage to stay in the trade. But again, in the live trading room, we use a 2-point stop. So we would have gotten if this had happened in the live trading room and we had taken this trade and we had not looked at any other indicator, such as our cycle indicator or our DMT or our slingshot or anything else, we were just trading this very basic setup, we would have got stopped out. We would have missed a 2.5 point rally because we got stopped out for 2 points. That's the truth. Okay? Now, let's move on. Alright. We get a bearish cross. Price pulls back to the BBC. You know what? I better show you this second opportunity pullback. Okay? I'd rather not, but I've shot straight for all these videos, all these years. Why change it now? Okay? This pullback, although there's so many reasons not to take this trade, and so many reasons why we probably wouldn't take the trade in the live trading room. But you know what? I'm just going to go, what if? What if you did? What if you did take it? See that trend line coming down? Do you really want to sell into that? You don't, and we'll teach you why if you take the free trial or become a partner. But the pullback here is 1408.75. And on the next candle, one candle, it pops up to 1410 1/4. 1410 1/4 minus 1408.75. It's 1.5 points. Anything to write home about? I don't think so. I'm just pointing it out because price pulled back to the trigger line. Okay? Moving on. We get a bearish cross. In other words, the red MA1 has now crossed below the BBC. Now we're sellers. All we need is a trigger to get us into a trade. Okay. Let's move this line out of the way for a minute. There's the cross, the pullback. Where's the trigger? This candle right here. Okay. All right. That's 1407.50. Let's talk about the drawdown. $14.0750 minus, nope, we better do that the other way. $14.0875 minus 14.0750 equals a 1 1/4 point drawdown. Okay, 1 1/4 point drawdown right there. See that? Then good things happen. Price goes in our favor. And it drops from our entry at 1407.50 to 1403.75. 3 3/4 points. Okay, so 3 3/4 point drop. Not a bad trade. You can make a living doing that. We get another pullback. Now this is a secondary trigger, which you might or might not have taken. If you did take it, you were triggered in at 1406 1/4. Your drawdown was 1407.75. 1407.75 minus 1406.25, 1.5 point drawdown, and after the drawdown, look at this. Price drops to 1475. So let's do that math. 1406.25 minus 1400.75 equals a 5.5 point decline. Yet another pullback. This time we don't have any drawdown. Well, I take that back. You catch a tick of drawdown here. See that? Right here. Your entry's here. You know what? Actually, you don't. You have no drawdown on this trade. And what happens? Price drops from the entry at 1403 down to 1392.75. 1403, 1392.75, 10.25 point drop. Okay. Yes, I know I could do most of this math in my head, but I prefer not to. So we've had a number of successful trades, and it's 10:55 Chicago time. You might want to be done for the day, okay? Maybe you don't, but here's what I'm saying. This is the period of the day when price action tends to get a little bit choppy. You hear it called the lunchtime, doldrums, any number of names that folks give it. But look at any chart, and yeah, occasionally there's a great move during the lunchtime doldrums and other times. So I'm just showing you what happened. Price pulled back here. Okay, where's here? Here is 1396.25. If you traded it, you had a drawdown to 97.75. Now let's go ahead and do the math. Okay, 1397.75 minus 1396.25. 1.5 point drawdown. Boy, that's starting to sound a little bit familiar, isn't it? Okay. Alright. So you took the trade, you sold it. You had a little profit here you could have taken. Nothing to stop you. Then you sweated through 1.5 points of drawdown. And let's do that math. I'm pretty sure I can do that without a calculator. From 1396.25 to 1392, carry the 1, 4 points. Okay? 4 point decline. Now I'm not skipping any trades, I'm not missing anything. Okay? You might be going, well, hey, what about that? What about that little thing right there where the MA1 gets above the BBC? I'm going to tell you that based on the dynamic of that trade, we would not have taken it in the live trading room. But for argument's sake, let's say, see, number one, you're already in this short trade, so it's kind of hard to get in that long trade. But let's say you took this short trade and you took this tiny profit, and you whipped around and got into the long trade. Okay. You got stopped out for 2 points. This trade made 4.25, right? From 96.25 to 92, 4.25. Okay. All right, we're almost done with this day. Coming close. On the way down, you could have, you could have taken profit here. You could have sold again on the pullback. You could have done any number of things, but bottom line, there was a 4 1/4 drop from here after this big 10 1/4 point drop back here. All right, the market has dropped. It's given you a leg, a pullback, a leg, a pullback, a leg. Man, is it really going to go lower? Well, again, we have other indicators that we use. We have other things we look at and think about. But you know what? Let's just say, because it pulled back, you took the trade. It's one of the toughest things people need to learn about trading, is that you will get stopped out. And it doesn't mean you're bad or wrong or any of those things. It means you're learning how to trade. And those who are really, really good at trading, they get stopped out all the time. They just know how to do it without letting it bother them. They don't get rattled or shaken. There you go. All right. We got one last setup in this day. Remember, we had some early trades, then a 10-point move, and then a 4-point move, a couple stop outs. And then we get a bullish cross. We get a pullback. The trigger is always the very same spot, right there. That price is $13.96 even. And price rallies up to 1401.75. Pretty sure about the math on that, but hey, 1401.75 minus 1396, 5 3/4 points. Okay, am I saying you should get all 5 3/4 points? Nope, not at all. Just as I've said in every video, there is no reasonable expectation that you're going to ride this thing to its zenith, get out at the exact final tick before it pulls back. I'm just showing you how far the trade, I'm showing you where the entry is and how far the trade went. If your trading plan says you take 2 points, you take 2 points. If your trading plan says you move your stop up and trail it right behind the BBC to get stopped out here, then that's what you do. On the way down, maybe you didn't get out down here because you were trailing your stop and you got taken out up here. People use the terminology, man, I gave back all that profit. Okay, but you took all of that. That's a nice day's work, whether you're trading one contract or 10. Nice day's work. Fair enough. If you have any questions, you can always email us, support@cfrn.net. You can call us toll free, 866-928-3310. And if you just want to take the free trial, dive on in, cfrn.net/apply. That ends the recap for March the 28th, 2012. We'll be back tomorrow with the recap for March the 29th.